you get to know me?
Yeah.
Because I've always found creative and interesting ways to make money.
Why don't we talk a little bit about how value investing works today in the kind of world we live in with technology and all that cool stuff.
Could you first explain why you're dressed that way, though?
Well, you don't like my outfit?
No.
I have a touch football game hours from now. What I'm trying to say is that value investing is not about a series of rigid rules. Maybe at its inception it was more that way, but rather a way of thinking about investing. So in looking at things through a value lens, today you're looking at all kinds of things that would have never been contemplated back when value investing was incepted, if that's a word. And so today, by using that lens and thinking in those terms and applying that to the types of things that exist today, pharmaceutical firms, technology firms, all kinds of new industries, that is what I think a successful value investor does today. So more focus on assets that are not hard assets, in the, like real estate, for example. More focus on what cash flows can be. So what cash flows are now, what cash flows can be, say for a drug in a pharmaceutical company. We have a couple of pharmaceutical investments ourselves, and in one case it's more of a classic value investment in the sense that this company has as much cash and immediate cash flow as market capitalization. So we think the business is worth more than zero, which is what the market's saying. So that's more of a classic way of looking at value investing. We have another pharmaceutical firm that has approved drugs that address very large established markets, and just by making us, and these drugs have particular competitive advantages, and just looking at how much market share they might capture conservatively, working that backwards, what would the discounts be in particular markets? What is the take of the company versus their partner? What is their gross margin? You come back to what cash flow, soon to be cash flow, might be for that company, and give that a conservative multiple. And if it makes sense relative to the share price, then perhaps you've identified a good value investment.